Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, February 4th, 2017. For the week, S&P 500, NASDAQ, and Dow Jones all traded flat, but more or less it still has an upward tilt, and especially with healthcare and staples and utilities are leading this charge higher. Generally speaking, I think the stock market is still bullish, and high-yield bonds are confirming this posture. Bonds are still proven an enigma, more or less trading flat. The US dollar had another sixth consecutive losing week. We'll see if this is the charm. We'll also look at some of the Forex information there. The gold is again pushing higher, but GDX had a weird price spike, and basically the future of gold is resting in the hands of US dollar. Oil again gained for the week, but I think still short of breakout. Energy ETF actually has lots of bearish divergences. We'll look at that. And I think natural gas is still correcting within a bigger uptrend. Right, let's move on to the indices. So S&P 500 ETF SPY. We had this slight, well, last week we had a gap up to all-time highs, closed at all-time highs, and then we kind of pulled back also with a gap. So this gap up, I thought this was a breakaway gap. Well, clearly this was not a breakaway gap. Now we pulled back, we closed this gap, traded more over sideways, and then on Friday here we had another gap up. So we'll see if this is the charm. This time is the charm. Overall, this is a very bullish chart. I see no major issues with it. There's a minor divergence from a couple of weeks ago. I'm not sure how much to pay attention to it. Overall, I think again this is a very bullish chart. Longer term, this is daily S&P 500. I want to point out a longer term divergence here. This is bullish percent index. Again, how much to worry about it is difficult to say. If you put the price labels, just see what's it like, how much of a divergence this is. Not a big one. This is 76.8, this is 74%, so I don't know how much to even worry about that really. Plus, this is the only index that actually has this divergence, so it's very minor. Here's QQQ. Apple reported this week, so there's a positive earnings report by Apple. So this is certainly helping the PowerShares NASDAQ 100 ETF QQQ. Here we don't even see this divergence. You can see here it was 79, and just recently we hit 80 for bullish percent index for QQQ. In other words, no major divergences. We're a little bit overextended, but again, overbought is a good thing in a bullish security. On QQQ on the daily time frame, all-time highs last week. Basically, we're very close to all-time highs this week again. As far as divergences, no divergences. These are all-time highs just on Friday and Wednesday decline line, and all-time highs recently in advanced decline volume line. Here is New York Stock Exchange Composite, very broad measure of the stock market. Also all-time highs here recently, and on Friday we hit all-time highs for advanced decline line, and recently all-time highs for advanced decline volume line. So same thing. I don't see any divergences with bullish percent index. In fact, the recent reading in January is actually higher than the reading in September. So this advance is being fueled by many stocks. In other words, this is a broad advance. Here's finally last week I pointed out this triangle consolidation, which is basically an unusual event. We had two inside weeks in a row, so this week was within the previous week's range, and additionally this week was within the previous week's range as well. So this is a triangle consolidation with a clear breakout to fresh all-time highs. So This is very bullish in my opinion, and we could continue easily higher. How much higher is difficult to say, but this is a bullish chart, so I would certainly avoid shorting it. As far as the individual sectors, here is financials, XLF. On Friday we had the XLF financials gain over 2% with a gap up. I think this is on the heels of attempting to deregulate banks further. So this is certainly looking good for XLF. But interestingly enough, the healthcare actually had a very good week as well and was the leader amongst the ETFs. And I pointed out this as well I've been pointing this out. This right here is a advanced decline all-time highs that hit as early as 9th of January of this year, and you can see that these are nowhere near a previous all-time high. So this was a bullish divergence, and now looks like we had another all-time high advanced decline line, and looks like XLV is attempting to break higher. So I would not discount healthcare sector just yet. Here is XLP. This is staples also are pushing higher, and I also said the same thing. We had a bullish divergence here in the staple sector, and I kept saying, if you listen to my previous videos, I kept saying that maybe this new next push higher will be fueled by the defensive sectors, and looks like we are more or less getting there. We'll see where this goes, obviously, but so far this is looking pretty good. And here's utilities sector, XLU. These are also all-time highs in advanced decline line back here actually in December, and clearly these are not all-time highs were back here in like June of last year. So right now we had this really choppy range, but looks like we are attempting to go higher. We had this big break higher here, and maybe we will eventually break out of this. This could be like a bull flag, maybe. This is a bull. This is a handle of the flag, and this whole thing is a bull flag, and maybe we'll finally break out and continue higher. Finally, JNK, junk bond ETF. This is a total return, in other words, with the dividends, hit all-time highs. Actually just on Friday, and these are all-time closing highs. So overall, this is also in junk bonds, this is a very bullish chart, and since junk bonds correlate very highly to the general stock market, this is confirming a generally bullish posture in stocks. Bonds are still prone to be somewhat of an enigma, and it's kind of difficult to figure out what's going on with bonds. Definitely underperforming stocks, obviously. I think for TLT, those are 52-week lows, whereas stocks have hit all-time highs recently. So if I had a choice of where I want to be, I would definitely want to be in stocks. I don't want to be in bonds. Currently, this can all change very quickly, and bonds can all of a sudden rally because something terrible happens, and people would want safety in bonds. But for now, bonds did, these are treasuries, 20+ year treasuries, so longer term treasuries, they did bounce off the lows and now pull back. So it's kind of like a moment of truth, basically. Bonds could easily collapse from here to fresh 52-week lows. Alternatively, of course, they could push higher to maybe this 200-day moving average, and of course this big unfilled gap. This could be a very, like a magnet, price may be attracted to this unfilled gap. So on a weekly time frame, it's a little more obvious for TLT than for other bonds, because these are all-time highs, but these are indeed 52-week lows. So maybe this is already, this is definitely not a good sign when security is hitting 52-week lows. But then looks like we rebounded, so maybe we're attempting to bottom. Difficult to say. For Corporate bonds, also similar picture, but you can see it's not as volatile. And in fact, this bounce of the December lows took us almost to the gap area right there. And then we pulled back again, and looks like, I drew this line here, the support resistance line, and we're attempting to bottom here. You can see 1, 2, 3, 4, and now fifth attempt to bottom right there. And also this 50-day moving average seems to be holding, like acting as support with some buying pressure being present. Again, where this is going is difficult to say, but at least LQD, this corporate bonds are a little bit more clear than TLT, because here we had a breakout, 52-week high. Actually, these are, I believe, all-time highs. A pullback, and now it bounced off the possible, of the support where before it used to be resistance. You can see a breakout right there in March of last year above previous highs, and now it got basically pulled back there. So we'll see if this is indeed going to act as support and we don't make a lower low. For now, I cannot say that this is a bearish security, but then again, there are better opportunities out there than just simple corporate bonds. Moving on to the Forex universe, this is US dollar in the daily time frame. US dollar index, it is also traded as DXY. So these are multi-year highs. So multi-year highs, 52-week highs are good signs, bullish signs, obviously. I said that we are overextended here. Listen to my videos, and the pullback was likely. We were getting this pullback. So it looks like we are retesting this low here from December. Looks like we actually broke below this low, at least intraday. Now, even last week I said that maybe we're bottoming here. Clearly we didn't bottom because we made a lower low. In fact, we closed below this recent lows, but now looks like we're attempting. At the very least, there's this hammer-like candlestick on Thursday. So it's possible that dollar is attempting. I mean, this Friday candlestick is not great, honestly, but at least Thursday's is looking better than the previous one. So it's possible that we're at least attempting to bottom here. And additionally, this is a weekly time frame for US dollar, and you can see that we had 1, 2, 3, 4, 5, 6 consecutive red wicks here, red in a row red candles, and this is a weekly chart, so this is quite unusual. I mean, occasionally we get like rallies of this nature here, but they're not very common. So it's possible that we're kind of getting to the end of this correction from the multi-year highs. So we'll see where this goes, but I would say that we're getting to the bottom of this correction now. In fact, here's euro and US dollar, and this versus US dollar. Here's a daily time frame. You can see that we had a hanging man type candlestick here on Thursday, and a shooting star type of candlestick on Friday. So it's possible that we're already rolling over right there. Of course, the bigger resistance I think is still up here at about 1.0872. So it's possible we will attempt to recapture it later in the month. Here's a weekly time frame for euro versus US dollar. Here I pointed out multiple weeks, 1, 2, 3, 4 weeks that we stopped going lower. Basically, we were bought out 4 weeks in a row, and then rallied from here. So the previous resistance is already very close. So I wonder if we're gonna roll over and head lower. This is a bearish security. On the weekly time frame, US dollar versus Japanese yen, I think we reversed. In other words, US dollar became the winner. We reversed around here, around last year. it was a reversing process. You can see it took a long time. Finally reversed and rallied like there was no tomorrow. Ran into resistance where the previous trading occurred. Lots of previous trading has occurred and pulled back. So I said last week that it looks like we are getting support found. In fact, I thought these two candlesticks, and this is weekly candlesticks, were already like support, but looks like this all got erased this week, and we pushed lower. We didn't close below this low, so I wonder if we can still consider this as a bottoming pattern of some sort. Finally, US dollar versus Canadian dollar. I think still this is a bullish security, but you can say that, oh look, but this is a trend line, and this trend line has been violated. In fact, it looks like we closed below this trend line for a couple of weeks now. Problem with a slanted trend line is it's very difficult to draw it. I mean, this one is an obvious one. Of course, I could draw it completely different, and let me just show you what I mean by that. So let's say I draw it like that. I can also draw it like that. And in that case, I don't know where to put it, but maybe I'll put it like that. So let's just show that I'm not a big fan of slanted trend lines. Occasionally they work out. Sometimes they do, sometimes they don't. I'm more interested in support levels for US dollar versus Canadian dollar, and support levels we're basically already there. There's a support right there. Okay, here's gold on the daily time frame. Big rally here of the December lows. Looks like we ran into some sort of resistance here, pulled back, and now we're attempting to break through this resistance again. This rally is, I think, entirely dependent on the dollar. You can see the dollar is dropping, gold is rising, but maybe the dollar is done dropping. It's entirely possible that this is it. So if dollar decides to go higher from here, gold will drop. Some things I can say for sure, and this is one of those relationships where dollar and gold almost always move in opposite directions. However, we did get some improvements in the market breadth of the gold miners. So here's some of the gold miners market breadth indices that I follow. Those are private data, experimental indicators. So here's one that I follow. This is a percentage of stocks within the index on a buy signal. We did improve a little bit from last week. We used to be at 50, now we're at 62.5, so that's a good sign there. Another input for the total gold breadth index, which I still say is bullish, but could easily collapse. Here's actually, I think is going to improve further. So gold breadth index is a percentage of stocks in an uptrend, and we did get to 62.5, which is a positive sign. Bearish trigger for this one is 20%, and for this one up here, the bullish trigger, we still need to get to 90, so we haven't gotten there yet. But I think this part, the raw data, percentage of stocks in an uptrend within GDX, may actually improve further next week. It will all depend, of course, on the behavior of gold and dollar as well. Last week I pointed out this possible outside reversal. Didn't happen. Looks like it got negated. Looks like we're closed above it and actually moved above it. So we'll see if this is a true negation of the outside reversal, or maybe we'll see another tapping pattern and roll over. It's really difficult to say, but I feel like we're getting a little bit overextended because this is a V-type reversal. They do happen, but they're more of exception than the rule. For example, here maybe this was a V reversal, but no, we had to retest it and then we rallied afterwards. So I think we're getting a little bit overextended, and especially if the dollar decides to gain gold will drop. Here's GDX. First of all, I want to point out this big spike right there, this price spike. It's a very questionable price spike, and I'm not, I'm certainly not 100% if it's a true spike or not. So we'll see where that goes. As far as the market breadth for the gold miners, there's still a little bit of a bullish divergence. You can see the market breadth is pushing higher. In fact, here's bullish percent index, and we went as high as 53%, so that's a positive sign. And the index itself has not yet made a higher high relative to this high, so there's a little bit of a bullish divergence, which is still a good thing. However, if this spike is indeed a true spike, then we could see, this could be like a rejection spike already. Here's what I mean by the spike being true or not. This is a GDX on a 5-minute chart, a 5-minute time frame from 1st of February. This is a very weird occurrence. You can see that I can go to 1-minute chart and it's still shown as a one big spike. In other words, this was like some sort of a flash spike, or like a flash crash kind of thing. So none of the gold miners that I follow showed similar spikes. So I don't know about this. Maybe they'll need to adjust the prices, especially if you bought up here and this is like big spike. This is 4% difference. Alright, and then finally here's GDX in the weekly time frame. Nice big move here. This is about 36%, 35% move of the low. So it's a pretty impressive move. But then again, GDX moves that much, so it's also small cap stocks within it. So it's not unusual for it to move this high. But again, we are approaching this previous peaks here, so it's possible we will get resistance and we may need to flush out some of the weak hands. Right, then moving on to oil. This is weekly time frame for West Texas Intermediate light crude oil. So last week I pointed out that we had an inside week here. This week right there is within previous week's range. This week I don't see a conclusive breakout or breakdown, so again we're kind of trading sideways more or less. Basically we need to see a breakout above 55 here, or a breakdown. It's just basically a big, like a trading range here between like 50 and 55. As far as daily time frame, you can see that there's that 52-week highs and then a spike, and it looks like a rejection candle here, honestly. And then since then we're more or less trading sideways. The energy ETF is showing interesting patterns here. Here is daily time frame for XLE. These are 52-week highs, but you can see it's very steep advance, and now it looks like we're getting a correction, attempting to find some sort of a bottom. It looks like we came all the way down to the breakout level. There's a breakout right there. So the million-dollar question, of course, is will this breakout hold? And I think it will depend on oil. If oil continues higher, I think energy ETF clearly will benefit. Having said that, you can see pretty obvious divergences, and this is a bearish divergence in advanced decline line. This advanced decline line for XLE, you can see this making lower lows and lower highs, while the index itself is making a higher high. Additionally, just this week we made a lower low in the advanced decline line. In fact, we broke below this low. So this used to be 277.30 and now it's 276.60. So looks like this advanced decline line is pushing lower. So in other words, this low right here, which corresponded to 277 here, and now this low is lower than this low. So it could be that we're going to continue lower. So I would not discount possibility of oil rolling over together with XLE, continuing XLE continuing lower. And here's natural gas on a daily time frame. So very choppy chart, but then again, natural gas is choppy. So if you decide to trade it, be very careful and size your positions accordingly. So these are 52-week highs, and looks like now we are getting a, I think still this is possibly a pullback within a bigger uptrend. However, what worries me is this big gap down and the big red candle, and additionally an inability to close the gap. In fact, here is one attempt and here is another attempt, and big stiff rejection candle here, followed immediately by more selling. Looks like we tried to bounce here on Thursday, but completely unraveled on Friday and broke below this low now. So I would not discount the possibility of natural gas dropping possibly as low as this breakout level. This breakout level has a lot of support, so I would still think about going long. I would still probably not want to short this chart. But a million-dollar question is again, where would the bottom be found? So here's the weekly time frame for natural gas, and this is the reason why I'm probably gonna avoid shorting this chart for a while still, because this 52, actually this are multi-year highs. Going back here still, so this could be thought of as like a fallen wedge. You can see there's a bunch of gaps down here as well, so that need to be still filled. If we break below $2.50, then I will contemplate the possibility of a bear market in natural gas. But for now, I think it's still a bullish chart. If you like what you're hearing, please like this video. If you have any comments, do comment or send the questions in. And of course, share this video if you feel that you are getting some good information out of it. Please stay tuned on how to find us on the internet, and thanks for watching. Have another great trading week. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now. So please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling and which funds I'm looking at, potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the success in trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members. So that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right. Thanks for watching, and please consider signing up for the trailer services. Bye-bye.